What is good, NIO family? It's Rey-Jay back with another video, and in this one, I'm going to be talking about the one and only NIO stock, what you should be looking after for the future, and why tomorrow is going to be an absolutely massive day for the markets, for NIO, for the economy, the stock market going forward, as we have CPI coming out. So I'm going to break down when is CPI coming out, what the expectations are, and what could end up happening to the markets based off the numbers we may end up seeing. Now, before I break anything down, before I get into any more details about CPI and why this will affect NIO, I do have to mention a couple of things before starting. Firstly, I'm not a financial planner. Don't take any of this as financial advice whatsoever. And also, if you guys can, please smash the like button if you want to see more videos like this. It not only benefits me, but benefits the entire NIO community as a whole. And the last thing is, if you guys can, please check out the WeBull link down below and in the description. If you sign up for WeBull, the link down below, and deposit any amount of money into the account, you're guaranteed up to 12 free stocks, each worth up to $2,000. And the best part is, any of these 12 free stocks could be a free NIO share, a free Tesla share, or a mix of all of them. It's a limited time offer. The offer ends in just 3 days. Check it out before they run out. With that out of the way, let's get on with the video. So NIO is currently just slightly in the green, but overall we're pretty flat for the day. NIO did end up actually going down to that 12.5 range that I mentioned in my previous video. And as of right now, NIO is holding up all right. However, guys, where NIO goes tomorrow and in the future, over the next week or so, it's going to depend heavily on CPI because this will affect the Fed's policies and things like that. So the reason why this is so impactful is because what the market does tends to be in unison. And when the Fed looks at this data, it's going to change its policies. It's going to be more hawkish or less hawkish, maybe raise rates even quicker or not. And that's why the whole market will be affected. Right now, fear is essentially driving the markets. We can see it. We're in a very extremely fearful situation. NIO is very low compared to where it was before. And this is why CPI is going to be so important, because it's going to be the big tipping stone as to where we end up moving forward. So for tomorrow, CPI is actually coming out at 8:30 a.m. Eastern time. It's going to happen right before the market opens, and this is why you have to be very prepared for it. If you don't know what this is, it's basically the consumer price index that represents, it's just one of the major inflationary measures. That's the simplest way for me to explain it as quickly as possible. And it's so important because this will affect the sentiment in this market. As of right now, it's expected to actually be a little bit hot for the month of September, because once again, it's coming out for the month of September because we're still in mid-August, and it was actually hotter than expected the last time it came out, and that's why the market ended up moving the way it did, getting a big rejection. We can see right here, yields are already starting to drop a bit in preparation for this. The market does not like uncertainty, which is why the market is trading the way it is. Now, there are other people out there talking about how, oh, it's going to be very bad. Economists think that it's going to be pretty hot and we could actually see a 40-year high. Once again, it's not confirmed until the data comes out. So now I want to just talk about the data. Right now, the Bureau of Labor Statistics is expecting an 8.1% rise from a year earlier, slowing from the 8.3% rise overall. So they are expecting it to come down just a bit as gas prices actually did drop. But another very important number would be CPI excluding food and energy, also known as core CPI. If you look at core CPI numbers, the forecast is about 6.4%. So I'm going to actually break down all these numbers and make it very simple. So I know this is kind of confusing. So once you understand it, it's going to make a lot of sense. Looking at the previous data, all right, the blue line right here, you guys could see it. This is the overall CPI, the overall inflation rate in the USA, one of the most accepted measures. The overall number did go down because gas did bring it down, energy prices came down. But if you exclude food or energy, which the Fed can't control, it actually went up when it comes to core CPI. So this includes other things out there, such as rent, housing, buying other commodities and things like that. These all went up in value in the month of August, the last time it came out, and the market still got a drop. That's why core CPI, which is once again inflation without food and energy, is just as important as the overall number. And that's why we have to look at both of the data points. Now, overall, for the month of August, the overall CPI came down, but core CPI went up. And that's because of the fact that gas prices came down. The average gas price dropped in August compared to July, and they did drop again in September. So there is a good chance we're going to see the overall CPI come down again, but it's also going to depend heavily on core CPI. So this is why I want to break down the numbers. So let's look at the numbers. The expected value of CPI would be an 8% increase year over year coming for the month of September. Now, if we get 7.5%, 7.9%, that would be pretty good. The market could rally. But also remember, it's also based off core CPI, which is a different CPI measure which comes out at the same time. I'm going to break that down in a second. So the first thing is we want this number to be low, the overall CPI. We want it to be 7.5% to 7.9%. 8% is also possible. 8.1% would be meeting expectations. In my opinion, both of them are very possible. And I think we're likely to see 8% flat overall. Now, if we get 8.2 to 8.3%, that would be pretty bad. The market could take a bit of a hit. 8.4% or above is going to be very bad. And we could get a big crash if that's the case, which I think is very unlikely. We're more likely to see something, in my opinion, between 8 to 7.9%, but I'm aiming a little bit more towards 8%, so a slight drop in CPI overall. Going down to core CPI, because this is also coming out at the same exact time. Once again, it's CPI without food and energy. The expectation, according to many data sources I found, is 6.4%. All right? Now, that's actually an increase compared to the last time it came out. That's what we're expecting. But if we get anywhere between 6 to 6.2%, that would be pretty good. The market could also rally based off this. If we get 6.3 to 6.4%, that would be okay. The market could rally a bit, but maybe trade sideways. But I'm anticipating it to not be that bad. Anything above like 6.5%, which is above expectations, would be pretty bad. And anything at like 6.6%, 6.7% or higher would be very bad and the market could crash. So just to make this clear, if we look at the numbers tomorrow, all right, even if CPI is good, but if this is bad, core CPI is bad, the market could still crash. We want both of these to be decent or good. We want both of them to be okay or good. It's very important to remember this when looking at the reports. Mainstream news outlets have a tendency of just talking about this number, which is important, but it's just as important as the other one too. So I'm anticipating, like I said, 8% CPI for tomorrow, 8% flat. I think we're going to get a beat on it, and the market could respond positively to that. But simultaneously, for core CPI, I'm anticipating 6.2%. I think it's actually cooling off a bit because when you look at the data, right here, core CPI has actually been flattening out for quite a bit of time. Demand in the USA may have actually slowed down, in my opinion. So I wouldn't be surprised if it's actually a slight beat again. And the thing is, it came out at 6.3% the last time this came out for the month of August. I wouldn't be surprised if September is a slight slowdown and we actually get 6.2%. Now, if I'm wrong, right, remember these numbers, take a screenshot of this picture and take a screenshot of this other picture. Look at what's good and bad. We want both of them to be okay or good for the market to rally. If both are bad, or if even just like one of them is bad, the market could crash or take a big hit. All right. So where NIO goes and the market goes tomorrow is heavily dependent on CPI. So please be prepared for that. Do what you have to do. With that said, I think it's a little bit more likely that we're going to get a slight beat on CPI, meaning it's not going to be hot. It's going to cool off just a little bit and show some signs of flattening, and the market might like that. So I'm a little bit more bullish than bearish for tomorrow. It depends on the data, so no one truly knows what's going to happen. But my prediction is NIO and the market getting a slight push to the upside when people least expect it. That's what tends to happen. And we could see NIO push above $13 if we get a nice move there. And NIO could break past that 13.5 resistance level and push and slowly approach the high 13s if we get a nice beat, which is very possible. So please watch CPI very carefully tomorrow, 8:30 a.m. Eastern time. Tomorrow is the big moment. Be ready, do what you have to do, and I'll see you guys in the next video. NIO to the moon because the long-term future is still incredibly bright, and peace out.